Finally, looks like a sliver, just a sliver, of sanity making its way back into private tech startup valuations. Some VCs telling their founders to pump the brakes just a little bit. Let's figure out why. Sell-off in tech stocks spreads to private startups, right? I mean, obviously markets were beyond frothy, beyond inflated, made absolutely no sense at all. Talking about on the show for, I don't know what, at least a year now, how none of this made any sense. So more hens are coming home to roost. Shares in startups are sinking in private trading as a sell-off in public tech companies and a pause in new listings send shockwaves through Silicon Valley. It's so interesting. I mean, you have these investors that are very smart, these VCs, very smart, savvy individuals who have to take a long-term view on the investing that they do. But it just seems like such short-term thinking. It's like, oh, look, the public markets are going crazy. And then how fast that happened in the public markets and then came down into the private markets really made you kind of take a step back and question, at least it did for me, question, just a lot of the decisions that these professional investors were making. I guess it's the system, right? You raise this fund, you got to deploy the money in a certain amount of time. These funds only have a certain amount of time frame for them to earn a return. So if you don't deploy the money, really, frankly, in the first couple of years of the fund, if you have like a 7-year fund or a 10-year fund, right? You need to deploy the money early so that you can then hopefully invest and the valuation of the company grows, that you can kind of keep it within that time frame, right? You need to maximize the upside. And, if you're sitting on the money for 4 or 5 years, then the company isn't going to appreciate in 2 years by the time your investors are expecting their money back. I mean, I do think there is also a lot of new investors cramming down existing VCs, right? You had these like hedge funds and growth funds coming in. They had a different expectation about value than maybe your classical VCs. So I think these VCs were really just kind of stuck, right? They had money they had to deploy. They had these very large funds that maybe, aren't used to have a different metric for what these tech startups should be valued at, which means they're willing to inflate the value of these private tech startups. And then, you kind of just saw the system like cascade upon itself, where you had massive like seed rounds in the teens of valuation, which is just insane. You have $15 million seed round valuation. It's crazy. And so it seems like finally a shred, not a lot, but like a tiny little sliver of sanity is coming into the private valuations. It's not like we're back to where we were. They're still inflated, but at least better from where they were a few months ago. You got, the information coming out here. More startup layoffs are coming as investors push founders to conserve cash. Basically, we can all see our system is unsustainable. We have hyperinflation. It's not transitory. We've printed, basically $10 trillion. And you're going to need a massive correction. I don't know when the correction is going to come, but it's coming. Is it in a year, 2 years, 4 years? I don't know. How far and how long can you kick the can down the road? Certainly not that long when the Fed says they're going to raise interest rates to 2% this year. Then it's going to come quick. So I don't know, a lot of factors at play. I think the VCs can see here, certainly the more sophisticated ones, that this is not sustainable, and, really pushing their startup founders, their portfolio companies, to be more frugal and conservative with how they spend money, which is a good sign. Still not back to where we should be, but it's better than the messaging we were seeing just a few months ago. If you're interested on this with the inflation and interest conversations, go check out the interview that we did with Chris Leonard, the author of Lords of Easy Money, where he talks about the role of the Fed for the past 100 years and how that's contributed to where we are today. And go follow us on Gab because you can't trust YouTube.